As a trader, understanding candlesticks and candlestick patterns is one of the most important concepts if you want to read price correctly. Being able to read price correctly will help you determine the overall market context, accurately predict what most likely price is going to do next, and ultimately help you increase the accuracy of your trades. In today's video, I'm going to explain to you everything that you need to know about candlesticks and candlestick patterns in less than 35 minutes to help you build the foundation of a profitable and consistent trader. So without further ado, let's get right into the video. Okay, so in today's video, we're going to be talking about candlesticks, everything that you need to know about candlesticks and how to use them properly in the markets. So the first thing that we're going to talk about is the basics of a candlestick. We're going to talk about how they form, the open, high, low closes. Then we're also going to be talking about the different types of candlesticks, the bearish versus bullish candlesticks. We're also going to be talking about how bullish a candle is depending on how it forms. Then we're also going to be talking about the bodies and the wicks because that's very important when it comes to candlesticks and how they close. And then we're going to be talking about 6 different candlestick patterns that I personally use on a consistent basis. Of course, we're going to be going over examples as well. And then I'm going to go on to some real examples with context and logic to really build the foundation and how to use candlesticks properly with context and logic behind it to make it more repeatable and to give you more confidence when you're looking to take trades in the markets. So let's first start off on basics of a candlestick. And right here, as you can see, I have 2 types of candles. On the left hand side, what we have is a bullish candle, and really this candle means that buyers are in control. So whenever we have a green candle in the markets, that just means the buyers are in control of the market. And really what makes up a candle is how it forms. So what we have here is our opening price. We create a new low on the market. We drive price towards the upside, and then we have our high, and then we have our close. So what we have here is our open, low, high, close, and that's basically a bullish candle in the markets. Where on the right-hand side, what we have is our open, which price opens up at the high, right? We make a new high for the market, we form a low, and then we end up closing to close off that bearish candle. And what we have in this case is our open, high, low, close, and this is what forms a bearish candle. And you'll see these candles are all over the markets, no matter what markets that you trade. Candlesticks are the foundation in the relationship between buyers and sellers, and understanding this is just the basics of how candles form. And now we can go into the different types of candles that we can see that make up the market, because no single candle is going to be the same as its previous candle. And what I want to talk about is that not all bullish candles are equal. Similarly to the downside, not all bearish candles are equal. Every single candle in the market is going to tell us a different story depending on the context behind it as well. So the first thing that we have in this case is what's called an indecision candle. An indecision candle can be green, it can be red, but the main thing about this indecision is that neither buyers nor sellers are in control. What we have is what's called indecision, and you can see we have an upper wick, we also have a lower wick as well, and this usually just indicates that the buyers and the sellers are on par, neither nor the buyers or the sellers are winning, and we're basically neutral, and that's what's called indecision. The second candle that we have is a nice bullish candle where really we're offering only upside. So you can see right here, this is a candle that we always look for. It's fairly bullish where we open, we have a very small wick, and then we end up driving price back towards the upside, and we also have a very small wick towards the high. So really, as you can see here, this was really a one-sided direction for the market. Really, buyers were in control of really the whole candle in this case, and this is what's called a bullish candle. So right here, what we have on the right hand side is our pin bar. There's a bunch of different names to call it. Really, the name doesn't matter, it's how the candle forms. And in this case, how this candle formed is we ended up opening, price ended up pushing towards the downside. So originally, right, the sellers were in control of this candle, but then the buyers started stepping in off the lows. We ended up pushing price back towards the upside, and then we ended up closing close to the high of the candle, indicating that buyers are clearly in control because sellers tried pushing this down, but the buyers instantly stepped right back up, pushing price right back towards the upside. And this is a very powerful candle in the right context. So as you can see right here, not all bullish candles are equal. Now let's go on to the next slide, which really breaks these candles down in depth one by one to really show you guys exactly exactly how these candles form and the reason and logic behind why some candles are more bullish than others. And the first thing that we're going to talk about is a bullish candle. And every single bullish candle has an open, a low, high, close. And that's exactly how every single bullish candle forms. No matter what type of bullish candle it is, it's going to come in that exact order. So the first step is that the candle opens. As you can see right here, step number 2, sellers start pushing price towards the downside. So you can see right here, we open, price starts pushing towards the downside. Now what we have is a low. We create a low in the market. And of course, if we have a bullish candle, what happens? That means the buyers start stepping in. So you can see the buyers start stepping in off the low. We end up pushing this back above its opening candle. And now you can see that the buyers are clearly in control of the markets. And then at the very end, majority of the times what we have is an upper wick. So the candle will close fairly close to the high, but this is the formation of the candle. So we have our open, our low, and then we create a new high, and then we have our candle close at the very end. As you can see, after the candle closes, you can see how it forms, and every single bullish candle is going to have these exact 4 steps. Now let's go on to the next bullish candle. And the next candle that we have in this case is our indecision candle. The indecision candle can be any color. It doesn't have to be bullish. It doesn't have to be bearish. Really, the main thing is understanding that it's indecision. So nor buyers nor sellers are in control. So the first things first is what we have here is our candle open once again. Sellers start pushing price towards the downside. So as you can see here, what we create is a low in the market. Price pushes towards the downside. Then what we have is the buyers stepping in off the lows once again. And then price pushes back towards the upside. We get back above our opening candle, and then we ended up forming what's called a high in the market. And then you can see at the very end, sellers right before the candle closes starts pushing price back towards the downside, and then we end up closing fairly similar to where we opened up at. So as you can see, we did a lot on this candle. We opened, we ended up pushing towards the downside, the buyers stepped in off the lows, made a new high, and the sellers pushed it back down to end off that candle close and really close to that candle open. So you can see in this case, if you are looking at this candle on the right hand side, this is a fairly neutral candle where we both have an upper wick, we both have a lower wick, and we really close at the exact same spot it open. And this is what's called indecision. And an indecision candle is a very good indication that price is consolidating and it's just waiting for buyers or sellers to take control of the markets. Now let's go on to the third candle. And the third candle in this case is what's called the pin bar. And the pin bar is one of my favorite candles. In the right context, this is one of the most powerful candles that we'll look for on a consistent basis. Number one, what we have is our candle open. So you can see right off the bat, every single candle forms the same way. It has it open. And on the second step, what we have is a strong push towards the downside. So you can see price opens up right here. We have a strong push towards the downside here on this candle, and sellers are starting to push the price down. So we make a new low, and what happens on the pin bar is that buyers actually step in off this low. So we have a really strong push towards the downside. Buyers actually step in and push price all the way back up towards its candle open, and actually we get above its candle open as well, and then we end up creating a new high. So we end up creating a new high here, and you can see at the very end the candle closes off at the very high as well. And really in this candle, what we had is a strong attempt from the sellers to push price down, but the buyers immediately stepped in off the lows and actually reversed all the selling attempts, and now we're back above the candle open. And this is very bullish because it shows how strong the sellers were coming into the candle, but then the buyers instantly step back up on the same candle and reverse price all the way back towards the upside. And depending on how this candle closes is how strong the candle is going to be. So as you can see right here, there are 3 different types of candles that we'll look for. This applies exactly towards the downside as well. And you can see not all bullish candles are equal. What also matters as well is on the next slide is that the size of the candle matters as well. We just talked about how the candle forms, the open, high, low, close. The size of the candle in relation to its previous candles also matters as well. So in this case, as you can see, what we have is the weakest candle on our left-hand side to the strongest candle. So you can see right here, what I have is a nice bullish candle here on the left-hand side. But if we're comparing it to the candle on the right hand side, you can see the candle on the right hand side is a lot bigger than the candle on the left hand side. The candle on the right hand side is about 2 times bigger than the candle on the left. So this really shows that the right hand side is a lot stronger in relation to the one on the left hand side. And that's why the size of the candle matters, and it matters in relation to its previous candles. So as you can see right here, we're gradually moving towards the upside from its weakest all the way to its strongest in relation to the size of the candle. What else matters? What else matters is how the candle closes. And one of my favorite sayings is wicks do the damage, bodies tell the story. So a candle closure is one of the most important things when understanding how candles form, because the close of the candle is very important. The open of the candle doesn't matter as much. What matters is the actual candle close. So the candle close is always going to be the most important thing. So as you can see right here, what I have is a clear level of resistance. So you can see price, we have a nice push towards the upside here. We have a little bit of reaction off our key level of resistance. So as price is now coming back towards the upside, what would I like to see? What I would like to see is the reaction that we have off of this key level of resistance, which is our swing high. So what happens next after the swing high? And there's really only 2 scenarios that can play out on the next candle. As you can see right here, I have 2 scenarios played out, and I have a bullish scenario. I also have a bearish scenario as well. So number one, what I have is a candle close above its previous swing high. So this is what's called a candle close above, and this signifies most likely we're going to have continuation towards the upside. So if you have a strong candle close above, you can see price opens up below it, right? We have a mini wick lower, but price ends up pushing above this swing high, and we end up having a really strong candle closure. So this indicates that buyers are in control, and after we close above this level of resistance, we can expect continuation on the overall market. So on the right hand side, what we have is a candle close below. So right here, what we have is a key level of resistance, and price originally, right, pushed towards the upside. So at the very start of the candle, right, price was actually pushing higher. So the buyers were in control at the start of the candle, but we actually ended up putting in a pretty big upper wick here. Sellers immediately took back control, reversed price back towards the downside, and we ended up having a candle closure back inside the range. So you can see that price reversed off our key pivot high, closed back inside the range, and this signifies a potential shift in momentum, indicating that price could continue back towards the downside. So you can see candle closes are very important, and these are 2 completely different scenarios that happen all the time, and waiting for that candle closure is very important. I want to mention this one more time. Wicks do the damage, bodies tell the story. The bodies will always give you an indication of what price wants to do next. So we just talked about candle formation, the size of the candles, the wicks. Really, candles don't mean anything without context. So if you have one individual candle by itself, it really doesn't mean anything. What matters is the context around the candle. So now let's build a little bit more context. We can add a few more candles as well. And now let's talk about the 6 different type of candle patterns that I use on a consistent basis. So what I have here is what's called their engulfing candle. And the engulfing candle is one of the most powerful candles in the right context. And on the left-hand side, what I have here is a bullish engulfing. So what we have, the first candle, which is called their lead candle. You can see price, right? We open here, we end up having a fairly bearish close towards the downside. And then as soon as price opens at the bottom, what you would like to see on a bullish engulfing is that we engulf the full candle. So you can see that price pushes towards the upside. You can see we have a very strong body candle close as well. So basically the candle that we have currently engulfs its whole previous candle, which was red, and this signifies that price is very bullish. Whereas on the right hand side, what we have is a bearish engulfing. It's the exact same thing, but towards the downside. Price pushes towards the upside here. We have a fairly strong candle close. Price opens, and then we have an immediate rejection towards the downside, and then price closes all the way down at the lows, showing that this is a very bearish candle. We also engulf its previous candle. We also close below its previous candle low, so signifying this is a clear bearish candle, and we can expect now continuation towards the downside. So now let's go into a chart to see exactly what this will look like. So right here I'm on the charts, and the first thing that I'm going to mark out is this pre-market high level. This is the area of resistance that we end up dropping from the first time. So the next time we come back into the level, we're going to be looking for the reaction that we have off of your pre-market highs. So as I zoom in here, you can see this a little bit more clear. Price has that upper wick right around your pre-market highs. This is also your high of day level as well. We have a nice sharp reaction off this level. So now you can see what I have have is its previous candle. So you can see this is a very small body that we've created, which is a bullish candle. And the next subsequent candle, we end up taking out liquidity, also closing underneath. So this full candle, so as you can see right here, this is a very strong bearish engulfing candle. So you can see this candle completely eclipse its previous candle's body along with its full candle as well, showing that this is a very strong candle push back towards the downside. And now you can see how price moves. As you can see, as price is pushing lower towards the downside, we have a couple candles here. We have another bearish engulfing, right? Continues the trend towards the downside, so on and so forth, right? We have continuation lower. Price now comes back up for the retest of a super key level. And you can see right here as well, price comes up into this key level of resistance, rejects off this level. We have our bearish engulfing where it eclipsed the whole previous candle. And this leads the next wave towards the downside on this ticker. And you can see how important these candles are. And you can also see at the very low of the range, price actually has a bullish engulfing, and this actually leads this way back towards the upside. So as you can see, the bullish and bearish engulfings are patterns that are very important, especially at key levels of price. So understanding the candles along with the context around the candles is very important to understand if there's going to be a potential reversal or a continuation of the overall market. Now let's go on to the second candle pattern. So the second candle pattern formation that we have is what's called our 3-bar continuation. So number one, what we have is our bullish 3-bar continuation. And what we like to see is number one is our lead candle, which we like to see bullish. So we like to see a nice strong push towards the upside. Our second candle in this case is called our indecision candle or our consolidation candle. So we like to see some consolidation, and we don't want to see a candle close above its previous candle high. So this basically just forms a nice little resistance here. And then our third candle is what's called that continuation candle and our confirmation candle that price is going to push towards the upside. And once we break above its second candle, and now what we like to see is a strong push towards the upside in the continuation of our trend. Now on the right hand side, what we have is the opposite, which is a 3-bar continuation towards the downside. What we like to see in this case is our lead candle be bearish. Our first candle have a nice push towards the downside. Our second candle, indecision. We don't want to see a candle close below our first candle. And then our third candle is this continuation candle where we like to see it now close below its second candle. And now that will signify that price does want to continue lower towards the downside and push in the continuation of our trend. So now let's go on to a chart to see exactly what this looks like. So as you can see right here, I have the example pulled up, and a 3-bar continuation is a continuation play. So it's not a reversal. What you need is a clear trend in the market. So you can see right here, price opens up. We have this original push towards the downside. We're actually breaking underneath our opening range low. So now we're in a clear trend towards the downside because we're breaking underneath our opening range low. Now what we like to see is continuation towards the downside. So if I zoom in on price here, the first candle that we have to have is what's called our lead candle. As you can see right here, this is our first candle that initially pushes price towards the downside. So we have our first candle checked off. Then we have our second candle, which is going to be our indecision and candle that really is inside of its previous candle. So you can see right here, we have this nice push towards the downside. Now you can see the bodies where we're in between the body of its previous candle. So this is also checked off as well. Now what we like to see is continuation towards the downside. So we like to see the third candle, which is our confirmation candle, break underneath its previous candle low, which is the second candle's low. And this should indicate that price is going to continue in the trend of the overall market. So you can see right here, as price is breaking below its second candle, we also have a nice weak candle closure as well. And you can see price has this nice continuation towards the downside just based off of that 3 candle bar sequence that we just talked about. The way to actually enter on these 3-bar plays is on the breakout. I'm actually going to talk about one setup that I look for at the very end, which is my personal favorite. Since I don't trade breakouts, I trade the retest. I'll show you what the 3-bar play looks like on a potential retest, and I'll show you the different types of entries that we look for as well. Now let's go on to the third pattern that we have. The third pattern what we have is our classic 3-bar reversal. This is one of my favorite patterns. As I mentioned, I talked about this earlier before. The 3-bar reversal is one of the most potent reversal setups that we can look for at key levels. So as you can see right here, what we have is a bullish 3-bar reversal. And the first candle that we like to see is our lead candle. So we like to see our lead candle push towards the downside. Then we have a reaction candle. So let's say we have a clear level of support here. Price reacts, which pushes under underneath this key level, you can see that buyers are stepping in. And then on the final candle, what we have is our confirmation candle, which we like to see close above its previous candle. So you can see in this case, we close above its second candle, but we didn't close above its third candle. And this is a solid 3-bar reversal. But the most bullish 3-bar reversal is when price actually closes above its first candle. When price closes above its first candle, that is the strongest 3-bar reversal. Whereas if it doesn't close above its first candle, it's still a strong 3-bar reversal, but not as strong as if it closed above that first candle. And on the right hand side, what we have is a 3-bar reversal towards the downside. What we like to see is our lead candle. So we have a nice bullish candle towards the upside, coming right into a key level of resistance. The second candle is what's called a reaction candle. You can see that price pushes towards the upside, but we close underneath our key level of resistance. And then our third candle takes us back towards the downside. We close below its previous candle. So now what we're looking for is this continued push back towards the downside. If you can have a candle close underneath its first candle, that's going to be a lot more bearish, but in this case, it's still weak since we did close underneath our second candle, indicating a potential shift in the market. Now let's go on to examples to see exactly what this looks like. As you can see, there's key highs and lows in the market. So you can see what we have is a 3-bar towards the upside. In this case, you can see price has a lead candle. We have our nice reaction candle. And then this candle, which is our third candle, you can see how bearish this candle is because it closed underneath our first candle. So I talked about that 3-bar reversal. The best 3-bar reversals will happen if the third candle closes underneath its first candle. This is one of the strongest 3-bar reversals. So you can see right at market open, price closes underneath its first candle and the second candle as well. This drives price all the way towards the downside. And now you can see as we're at the lows here, price forms a reversal towards the upside. You can see we have our lead candle. We also come right into a key level of support. You can see that this second candle is a reaction candle. Our third candle, it didn't close above our first candle high. So this one's not as strong, but you can see this is still a 3-bar reversal and we end up having this push back towards the upside. And you can see right here, price comes back towards the highs, where you can see another potential reversal in the overall markets where we have our lead candle pushes towards the upside. We have our second candle and the third candle. We close below its second candle, but not our first candle. You can see it took a little bit of a longer time, but we end up having this push back towards the downside. So you can see the 3-bar reversals and how they work. The strongest 3-bar reversal is going to happen when the third candle closes below its first candle in a bearish 3-bar entry. And in a bullish sequence, what we want to see is that third candle close above its first candle. Now let's go into the fourth candlestick pattern that we will look for. So what I have here is what's called our inside bar, and our inside bar is very important, especially on the daily time frame. It doesn't happen on the lower time frames intraday, but on the daily time frame, whenever we have an inside bar, what we can expect the next day is nice continuation to either side. So as you can see right here, what we have here is our inside bars. Our first candle is what's called our outer bar. So you can see in this case, what we have here is we have our high marked out. We also have our low marked out. And then the second candle, what we have is our inside bar. So you can see in this case, the candle that we currently have is inside of its previous day highs and previous day lows. Preferably for an inside bar today, what we like to see is a very small body. If we see a very small body, also small wicks as well, this really indicates that what we have is built up liquidity. And the way to trade the inside bars, we're going to mark out the previous day highs and lows. We're going to mark out the outer bar highs and lows. And what we like to see coming into this day is a break underneath its inside bar to target the outside bar. And we like to see a break above the high of the inside bar to target the high of the outside bar. So this is a classic inside bar day, and it's the exact same thing on the right hand side. What we like to see is a break of our inside bar to target our outside bar, and that's going to be key on the daily time frame. As I mentioned, the logic behind the inside bar day working is because there's built up liquidity. We haven't taken out the previous day highs and lows. So if you have an inside bar day, we can expect continuation to either side of the market to target those key liquidity levels. Now let's go on to a chart to see exactly what this looks like. So as you can see right here, what we have is a daily time frame. So the reason why the candles look like this is because it's a daily time frame. And a lot of times when you're on a daily time frame, there's going to be a lot of these wicks and these gaps and these imbalances. And that's what makes the inside bar effective. So right here, what we're going to mark out is the outer high. We're also going to mark out the outer low as well. And you can see in this candle, this is what's called our inside bar. So in this case, there's actually 2 days inside of this daily candle here. So this really just means there's built up liquidity on both these names. And you could see the next candle, once we broke underneath this candle low right here, which is our our second candle, you end up having a nice push towards the downside. And really, if you broke it up onto the lower time frames, would really just look like something like this, right? We have our previous day highs, we have our previous day lows. Now what we have is a lot of consolidation. So we have a lot of consolidation, and majority of the times what we have is built up liquidity to both sides. We'll have some sort of wedge pattern that's forming, and that's why we can look to target this outer bar, or we can look to target the upside on the outer bar as well, because we're having built up liquidity to both sides. Now let's go on to the fifth candlestick pattern that I look for. So right here, what I have is what's called the 3-method pattern. And the 3-method pattern is one of my personal favorite patterns that I look for. And really it's broken up into multiple candles. And the first thing that we look for, similar to the 3-bar play, is we have our lead candle. So our lead candle, we like to see bullish towards the upside. And then what we like to see here is this 3 patterns right here. And majority of the times, right, we break above a key level of resistance. And now, right, we're having this lower volume pullback right in towards our key level support. So a lot of times for the 3-method pattern, what we like to see is these lower wicks being put in, showing that buyers are stepping in. So you can see every single candle is pulling back towards the downside, but you can see these lower wicks indicating that buyers are stepping in. And then our final candle, which is our confirmation, which closes above all these candles. It closes above our first candle as well. And this just signifies that we're going to be having a continuation of the trend back towards the upside. And similarly to the downside, what we like to see is our first candle bearish. We have this nice continuation towards the downside. Then we have our 3 candles back towards the highs, where we like to see now these upper wicks here indicating that sellers are stepping in. And then our final candle, which is that confirmation candle that pushes price towards the downside, which closes below all our candles that we have, indicating that most likely price is going to continue towards the downside on the overall market. Now let's go on to the charts to see exactly what this looks like. So as you can see here, we're on the ES, and this is a classic example of the 3-method pattern. You can see we have a clear push towards the upside. So you can see the first candle is our lead candle. It's very bullish. We have a strong push towards the upside. We actually also break above this key level of resistance as well. So you can see price pushes above this high. And then what we have here is our 3 subsequent candles that push back down into where? A key level of resistance. So as I mentioned, right, context is very important. You can see these 3 candles are pulling back down right into a key level of support. And you can see these red candles are showing these lower wicks as well, indicating that buyers are stepping in. So right here, I have this zoomed in. You can see price has a nice push towards the upside. Now it's coming right back into a key level support. You can see that the buyers are stepping in right off this exact level. And then we have our final candle, which is a strong candle closure. And we close above all these candles. And as you can see right here, this is a clear indication that most likely price is going to continue higher. And if I zoom out just a little bit, you can see price ends up pushing all the way back towards the upside. So as you can see right here, this 3-method pattern is very powerful. It's a continuation pattern of the overall trend, and this is something that we'll look for in combination with our other entry models as well. So now let's go into the final candlestick pattern that I look for. This is one of my personal favorites and one that I use every single day. As you can see right here, we're on my last candlestick pattern that I look for, and it's what's called the order block. So the order block is one of my personal favorites, and essentially means that if you're in an uptrend, what you like to see is down close candles supporting price towards the upside. If we're in a downtrend, we want to see up close candles supporting price towards the downside. So on the left hand side, what we have here is a 3-bar pattern. So when you're trading the 3-bar pattern, it's a breakout trade. You buy as soon as price breaks above its second candle, but I personally don't buy breakouts. So what I'm going to be waiting for is the retest. So I'm going to be waiting for the retest of this down close candle for this continued push towards the upside. So this was called the break and retest, and what we like to look for is break and retest off of order blocks or down close candles to support price towards the upside. So see, this happens quite often. If you mark out down close candles in an uptrend, this is exactly where we're going to be looking to buy, with a stop just to break below the order block. And now we can have clear targets back towards the upside. On the right hand side, what I have is a bearish order block, and on the downside, what we like to see is up close candles supporting price. So in this case, price has that candle closed below, and the order block is valid once it closes below its previous candle. If you guys don't know how to draw order blocks or how to use them, I have a full in-depth video on exactly how to draw order blocks. As you can see in this case, price breaks below. So instead of selling once it breaks underneath the second candle, what I'm going to be waiting for is the retest off of your up close candle for this continued push towards the downside. And similarly towards the upside, we're going to be looking for entry with a stop just to break above this order block. And we're going to be looking for this continued push back towards the downside. So now with this being said, let's see exactly what this looks like on a chart. So as you can see, what I have here marked out on a chart is I'm going to mark out your pre-market high. This also coincides with their open. We actually end up having a 3-method pattern towards the downside. You can see we have our lead candle price. We have have 3 up close candles, and then we end up having our candle close underneath its first candle, right? Signifies that price is most likely going to continue towards the downside. So you can see our trend is already towards the downside right off the beginning of the day. Now what we're going to be looking for is up close candles. So in this case, every single time price makes a new low, what we can mark out is our up close candles. So if I zoom in here, you guys can see this a little bit more clearly. But once price closes underneath, what we can mark out is our up close candle. Instead of buying the breakout, as I mentioned, what I'm going to be doing is waiting for the retest. So you can see price comes right back into this order block. It wicks above it, but closes underneath this 1-minute order block, signifying that price is most likely going to continue lower. You can see nice reaction right off our 1-minute order block. And then we have this nice trend towards the downside. And we can also keep marking out order blocks as well. If we mark out this order block, see that price heads lower, comes back up to the retest. We have more continuation towards the downside. So as you can see, the order block is one of my personal favorites in combination with other confluences as well. That's something that I want to mention here. Patterns don't mean anything without context and logic. What you don't want to be is a pattern trader. I just talked about a bunch of different patterns that you can use and that I use on a consistent basis, but I only use these patterns in combination with context and logic because that's really what builds the confidence and allows me to take these trades. If I strictly just look for these patterns without any context, it's going to be very hard for me to have a repeatable and consistent system where I can make a lot of profits in a long period of time. I have to have the context and logic being built around the patterns, and that's what can give me a high probability trade. And that's why I always try and preach to you guys is logic and context is one of the most important things, and patterns in itself does not mean anything. So the last slide I have here is just key things to note. Wait for the candles to close. As I mentioned, wicks do the damage, bodies tell the story. It's so important to understand that the candle close is the only thing that matters. If you make decisions before the candle closes, it's going to be very hard because the candle close is what's going to tell you the story. If you buy in before the candle closes and it has a huge wick, just understand that thesis can be completely invalidated depending on how that candle closes. Number 2, candlesticks are the most powerful around key level. So I talked about these candlesticks and these patterns are very good, but what matters is the context and where the candles are in relation to the higher time frames. And the best key areas to look out for are the higher time frame key levels and also key pivot points on the chart. Another thing to mention is that higher time frames hold more power. 61-minute candles equates to 1 hourly candle. So if you have a 3-bar reversal on a 1-hour candle, it's going to be a lot more powerful than a 3-bar reversal on the 1-minute time frame. So with this being said, now let's go into the charts to see exactly what this looks like in real time. So as you can see, we're on my first example here. We're on SPY, and looking at its previous day's price action, you can see that we're clearly in a downtrend on the overall markets. Coming into market open as well, we're staying heavy. The key levels that we are going to have drawn out is going to be your previous day's low. So now we can go into lower time frames to play out the price action coming into market open. So now we're coming into market open, we can play the tape. You can see that right off the bat, the key level that we're going to have marked out is your previous day lows, which is your 580. What we'll be doing is seeing the reaction that we have off of your 580. If we can stay heavy underneath your 580, we can expect continuation lower. We can reclaim your 580. Potentially, we can see this mini push back towards the upside, back inside of your previous day's low. So you can see so far we had that initial push towards the downside here on SPY. Now we're coming right back up in towards this key level, which is your previous day highs. So as you can see right there on SPY, we end up pushing right back in towards your previous day lows, which also is in combination with your high of day as well. You can see that price pushed up in towards this key area. We had a little bit of a wick above. We can see this candle right here, which is our third candle, which is our confirmation. You can see in this case, this is what's called our 3-bar reversal, where we have our lead candle, which is our first candle. We have our second candle, which is your reaction candle. And our third candle, in this case, we actually close right around your first candle. So this is a very bearish sign that markets are most likely going to continue towards the downside. So this is where we can go look short right off of the close of that last candle. Our stop in this case can be just a break above your high, and now we can look to target low of day. We can also target a 1 to 2 towards the downside. Now we can play out the tape. So as you can see right there, we end up having a nice push towards the downside here on SPY. We end up having a nice little reaction off of your low of day. Came right back in towards this 1-minute order block, but you can see the wicks. As I talked about, wicks do the damage, bodies tell the story. Body candles close underneath the bottom of our order block, and now you can see we end up having a nice continued push all the way back towards the downside, towards low of day and below. Now we can go on to the next example that I have for us today. So right here, you can see I'm on my next example here on SPY, and what we can do is just play the price action coming to market open and see the reaction that we have off of key levels. So really you can see I have the first 5 minutes played out here on SPY, and the key levels I'm going to mark out are just going to be your 5 minute opening range high. I can also mark out your 5 minute opening range low as well, which also coincides with this kind of pre-market low, a couple of key touches here. Now what we'll be doing is waiting for the reaction that we have off of your 5 minute opening range high or your 5 minute opening range low. If we can break above your 5 minute opening range high, we can see continuation towards the upside. If we break underneath your 5 minute opening range low, we can see this continue push back towards the downside on the overall market. Now we can play out the tape. You can see that price is pushing underneath your 5 minute opening range low here. Now you can see we're having a little bit of reaction here. So we have some nice displacement towards the upside. Now we have kind of this immediate retest on SPY towards the lows. Let's see if we now have a stronger reaction off this level for this continued pushback towards the lows. So you can see right there, SPY came right back in towards our 1 minute order block as well as our 5 minute opening range low. This is the exact level that we rejected off as well. It's a very weak candle that we can look to short off of with a stop now just a break above this candle. And what we could be looking for now is low of day and continuation towards the downside, which would be a 1 to 2. Now we can play out the tape. And you can see right there on SPY, we end up having a very solid push towards the downside right off of our 5 minute opening range low. And that was a great example of using candlesticks along with context and logic as well to be able to capture that trade towards the downside here on SPY. And with that being said, I hope you guys enjoyed that video, learned a lot about candlesticks, the different type of candlesticks patterns, the ways to use candlesticks in combination with context, logic, and price action as well. If you guys did enjoy that video, I appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.